Welcome back, Punanis. Today I'm going to give you a full explanation of yesterday's CPI trade and how I made 330 pips. And this time I'm going to put more emphasis on the technical analysis, but also mention some of the macroeconomics because you cannot trade technicals without the economics and fundamentals. In the second half of the video, I'm also going to explain what I expect for today's jobless claims on gold. And I'm curious if you want free money or not. Forex is currently offering a 50% deposit bonus for their clients. I cannot emphasize enough that this is actually free money and it helps to boost small account traders as well as large account traders, because in these days, £1,000 to £2,000 of dollars is serious money. So if you want to claim your deposit bonus, go to alphafx.eu/4xc or visit the link below and claim your money today.
Come on, you pig! Come on, come on!
If you remember yesterday, gold was within this consolidation. When I started the live stream, I entered into a position at around 29.13. Now you can see on the TradingView chart that this was exactly that position. So you can already see that price was moving in a consolidation. Now usually when price is moving in a consolidation, that means that the market is waiting for something that's going to move out from the consolidation. For example, a high impact event. In the economic calendar, this was the CPI, which is the Consumer Price Index. Now we have two different consumer price index. One of them is the core, which excludes food and energy, which are the two most volatile items. And also we have the headline CPI, which is just a simple CPI that includes food and energy. You can see that CPI was forecasted 2.9%, so a percentage point or 100 basis point lower than the previous one, which was at 3%. At the core level, you can see that also a decrease was forecasted, and the actual number was on the core level lower than the forecast, lower than the previous one, and also on the headline level it was 2.8, which is lower than 2.9 and the previous one. And there were really two scenarios, gold to go up and to go down. And if you look at the current market trends, if inflation is decreasing, that is bullish for gold. If inflation is increasing, it's also bullish for gold. And I'm going to explain to you why. Now, currently the market is in a period where investors are fear of recession. But they also fear of inflation, because if inflation is increasing, that means that their investments are going to inflate away. Therefore, they need something that provides or generates positive return. So in case of an ease of inflation or decrease of inflation or slowing down of inflation, gold should go up. That was the case yesterday. In the case of fear of inflation, when investors are really scared about inflation because, as I explained, inflating their hard-earned yields and returns away, gold should go up again. And the third scenario, fear of recession, well, we all know that gold is an amazing recession hedging asset. So in every scenario, what I analyze, gold has more upward potential than downside risk. And this is why I made its decision prior to the PMI or the CPI data release to enter into a long position, because looking at all of the odds and all of the possible scenarios, gold had a clear range, a clear way to the upside. And you can see that from this entry point, gold already gained 344 pips. And when I ended the live stream, gold was currently at 83 pips, and I think I took profit around 110, 120 pips profit, and then gold rallied another 250 pips. And here you can see the private Discord of the Alpha FX members. And yesterday, before the CPI data trade in the morning, when price was consolidating, I already sent out the full analysis with macroeconomics and also this signal. You can see that this is the same buy position, and when price was consolidating, you can see on the screen. And I sent out a buy because I analyzed every potential outcome and scenario. TP, stop loss, sauce salad, all the information was given to members. If you want to become a member of the AlphaFX community, go to alphafx.eu and take one of the membership which suits you. We have monthly membership, there's only one left, it's £99 per month, or you can join for £199 for a lifetime. Going back to the chart, so this was an easy 340 pips profit. But the question is, where gold is gonna go next? The first thing we need to do is look at the economic calendar to see what do we had for today. As you can see, we have core PPI and initial and continuing jobless claims. Now this is good because this is the kind of high impact data that you want to see and you want to trade. You can see that we have two support levels. The first one is obviously the consolidation from yesterday. The second one is the daily pivot. Now, there isn't a big difference from this one, the daily pivot and the consolidation yesterday. So I think we can use this area here as our support. So price right now is trading in between the support and the resistance, which is the previous all-time high. And if you look, it is perfectly in the middle in between the support and the resistance. What I expect today is exactly the same as yesterday, because everything is pointing into the direction that, you know, we're going to have inflation, we already have inflation, even though it's a little bit easing. But if you look at the last 5 months worth of data, you can see that inflation is going up and not down. Yes, yesterday we had a bit of an ease, bit of a pullback on inflation. It decreased a little bit, but generally speaking, the last 5 months is showing a clear increase in inflation and in prices of goods and services. So from this perspective, what I would expect today is similar as yesterday. Sell the news, buy the fact. Now, if PPI comes out today higher than expected, that means investors are going to buy gold because fear of inflation. But first it's going to drop because they're selling the news, but then they're going to buy the fact. So let's type it out. Higher PPI, it's going to be bullish for gold, but this is going to be sell the news and buy the fact. The second scenario is going to be lower PPI. Now, exactly the same scenario as yesterday. A lower PPI means that on the factory level or on the producer level, because PPI means producer price index, so at the producer level, if price is decreasing of goods and services, that means it's a leading inflation indicator and tells us that further down the line in a few months, prices should come down. So both in the scenarios, if we have higher PPI and lower PPI, that should push gold up. But in case of a higher PPI, we're going to see a pullback to the downside, selling the news first and then buying the fact as I explained. On the other hand, in case of a lower PPI, we're not going to see most likely a pullback. We're going to see a straight spike through the all-time high if PPI is low enough. So we want to see a significantly lower PPI for price to break through the previous all-time high. Yes, today we are going to live trade again with the members. I already sent out the same analysis as yesterday with chart, with TP, with stop loss, everything. So the team already has all the information necessary. And maybe we're going to do a live trading session today for you, with you. The account I opened on 21st of January, I'm up 62% with the maximum drawdown of 10%. So it's a nice little gradual increase from 21st of January all the way to 5th of March. I think the total profit was £61,000. So this is a £100,000 account, and the profit is now sitting at £61,000, which is pretty good. So if you want to become a member today, go to alphafx.eu and sign up. Link below the description.